Good morning, good morning, good morning. It's Wednesday, the 20th of November. Morning, Chris. It's me, it's Ryan with the Morning Blast. We're just waiting for Mr. Michael Brown. There he is. Morning, Paul. Morning, Chris. Invite to co-host invite sent. Come on down, Mr. Brown. Is he accepting the invite? I'm sure he will. There he is. Morning, sir.
Good morning, Ryan. Good morning, everyone.
Good morning. You're sounding a little bit healthier today. You were sounding a bit iffy.
I do feel marginally healthier, actually.
See, I do care. See?
Well, at least you pretend to care.
Oh, I genuinely do care. Let me get the legals out of the way before we get into trouble. Nothing discussed on this Spaces session constitutes trading or investment advice or infers any kind of endorsement by PIQ Global Limited. Trading is PIQ or PIQ Suite, or indeed its affiliates and the hosts, which, as you know by now, is of course Mr. Michael Brown and myself, Mr. Ryan Paisley. What's going on? Tell me, talk to me.
Well, indeed, yes. It was, good morning, all. It was an interesting day yesterday because almost as soon as we finished up this call, we saw quite a significant lurch lower in risk appetites, and sentiment soured quite significantly. At one point, the S&P and the Nasdaq were both down by around about 1% intraday. But then we saw all of those losses paired and more, with indices closing the day in the green. The S&P up by about 0.4, the Nasdaq up by about 0.7%.
Can't keep a good stock market down.
Indeed, and I think that just speaks to the continued enthusiasm of dip buyers, and it shows that the path of least resistance continues to lead to the upside. I'm loath to try and pin price moves on sort of slightly tenuous narratives, but it does seem that
But
common
we'll do it
wisdom.
anyway.
Well, I'm going to do it anyway. It does seem, at least judging by the financial media, so take this with a little bit of a pinch of salt, that the move lower in risk seemed to coincide with these headlines that we had out of Russia, whereby Putin has apparently tweaked the nuclear missile doctrine that they use over in Russia, which has lowered the threshold and widened the potential use cases for nuclear weapons. And of course, this comes after various Western-made weapons. They've now given permission, the United States, for those to be used for strikes into Russia, and that has indeed taken place. But the market was only pricing in the risk of sort of World War III and nuclear Armageddon for about half an hour, to be
Well,
completely honest with you.
to be fair, it's got to be bullish, right?
Well, I mean, let's be honest.
Less stocks to own, so there's the supply of stocks is going to go down. So probably there you go.
Yeah. Oh well,
There's me.
there's also there's
That's my bull case.
There's also the argument that if it's a nuclear war, who gives a fuck about their portfolio anyway? We're all just going to get incinerated, so it doesn't really matter. Just
So
buy the dip.
jovial on a Wednesday.
Indeed. Right, moving on from that, we did see a little bit of shakiness elsewhere. Treasuries rallying, the 10-year ending the day about 3.5 basis points lower, but it was a little bit more directionless in the foreign exchange space. The dollar trading pretty flat in a tight 106.10 to 106.40 range. The euro holding just shy of 106, cable just shy of 127 on the day yesterday, but we have popped north of that level this morning briefly on back of the UK CPI data, which I'll get onto in a moment or two, and some firmness coming through in both gold and WTI, both rallying by about 0.75%. In terms of other bits and bobs to recap from yesterday, we'll start with this one because Tom Talks Cars is here. China, they have apparently hit a few problems in terms of their chip sector. Obviously, Huawei have been slapped with a shed load of sanctions recently, and apparently their progress on making AI chips to, well, either copy or compete with NVIDIA, depending on how you view the situation, that has almost entirely stalled, which I think the US government will see as a win. Speaking of the US government, Trump continuing to make cabinet picks. He has picked Howard Lutnick, who is, of course, the CEO of Cantor Fitzgerald and BGC. He was in the running for Treasury Secretary. He has been chosen as Commerce Secretary instead. Still waiting for that Treasury pick. Elsewhere, yesterday we had a bonanza of central bank speakers. The BOE, 4 of the MPC were testifying to the Treasury Select Committee. Governor Bailey was talking about how a gradual approach approach to rate cuts remains appropriate and that the bank need to see services inflation come down more, which we didn't see in this morning's data. And you certainly can't accuse anyone on the MPC of groupthink at the moment. We had Deputy Governor Lombardelli saying that inflation
Great
risks
name.
are broadly balanced. We had external MPC member Catherine Mann saying that inflation risks are almost all to the upside. So certainly a difference in views on the MPC, which I think we can all agree is a good thing. We also
Yep.
got a little bit of clarity. The BOE have obviously been saying for a while now that they want to deliver gradual cuts. Alan Taylor, one of the new external members, he explicitly said gradual implies 100 basis points of easing over the next 12 months. So there you go. There's a number
There's your roadmap.
to pin to that guidance, which is pretty much a quarterly pace of cuts, which we were all expecting anyway. We also heard from a few of the ECB bods, again, just reinforcing the case for a 25 bip cut in December. If you didn't know that was coming, then you've obviously been living under a rock. And we heard from Jeffrey Schmid at the FOMC. He's a 2025 voter. Again, just stressing that the Fed cannot and will not react to fiscal policy until it is actually enacted. So anyone saying that what Trump may or may not do will impact the December FOMC meeting, ignore them, because it will not. And last but by no means least, at risk of veering into your territory, Ryan, or a nice segue, there were some headlines yesterday that Iran have apparently agreed to stop producing near bomb grade uranium. Initially, you go, that's good news, but apparently they've already produced enough of it, so they don't need to carry on.
Yep, I will scrub that one off my list.
Well, sorry, you can go through
No, no,
whatever else is left on your list now.
no. You've done as usual. You've done a fantastic job. I will start with Trump. Trump is considering crypto lawyer Teresa Goody Gillian to lead the SEC. Obviously, that would be one for the crypto bulls to get frothy knickers over. Sticking with Trump, he's scheduled to interview former Federal Reserve Governor Kevin Walsh and Apollo Global Management CEO Mark Rowan today for the post of Treasury Secretary. As Michael Brown just said, Ludnick is now going to be Commerce Secretary. Some market moving metrics. Sorry, start again. Some key market metrics are starting to suggest that the Trump inspired rally in the dollar may have plateaued. Some momentum indicators are signaling that further upside may be limited, and investor flows have become less one sided, whilst views about the currency's direction are starting to become more circumspect. That's by Bloomberg. UK labour market, our favourite topic, it apparently is in better shape than official data suggests, and I do believe I saw the number of 1 million to better, according to new analysis that finds there have been no surge in the rate of economic inactivity since the pandemic. What's your view on that? I guess you have one.
Well, a million what is the question?
Well, people, I'm assuming.
Yeah,
Wow.
but as in people in employment or vacancies or
Well, I don't know. I've only got the headline here, but yes. But to be honest, whatever
kind of
we
hard
say
to have a
is
view then, mate, to be
well.
honest.
But to be honest as well, how long have we been saying about the ONS data being absolutely tripe?
Oh, I mean, it's been 2 years now,
It's
and
been
it's not
absolutely
getting any better.
ridiculous.
So,
Moving away from the UK, China's President Xi told German Chancellor Scholz on Tuesday that he hoped Germany could help the EU and China to resolve the issue on tariffs on Chinese EVs as soon as possible. To be fair, I think Scholz has got other problems on his plate right now, i.e., where's his job going to be in a couple of weeks' time? Citadel Securities is aiming to become a material player in a material world. There you go. Player in Eurozone
please
government
don't
bond
sing.
trading. So I was very close. Government bond trading by next year after building a team of traders in Paris and securing valuable access to German debt auctions. In gold, always believe in yourself.
Oh no!
Gold,
Oh
sorry,
god!
gold will rally to $2,900 an ounce by the end of next year, according to UBS. Echoing a call from Goldman's as the central banks expand their holdings, saying it's likely to be a period of consolidation due to stronger dollar and higher yields before it starts climbing again. BlackRock's iShares Bitcoin Trust news. The first option wagers hit 44 billion in that 44 billion iShares Bitcoin Trust. I'll start again. The first options in that trust suggest that traders see scope for the token to break more records, with more than 350,000 contracts changing hands after the Nasdaq listed them on Tuesday. And about 80% of those bets were bullish. So again, more frothy knickers for the Bitcoin bulls. Putin is apparently open to discussing a Ukraine ceasefire deal with Donald Trump but he rules out making any major territorial concessions and insists Kiev abandons its plans to join NATO. And finally, Volkswagen and unions gear up for the next round of talks over wages and plant closures, and company and industry data reviewed by Reuters shows that the automaker spends a higher proportion of sales on labour costs than major rivals. And given the German labour constraints and labour union laws, that's unsurprising and kind of shows you what a bit of a pickle they're in. And that's your lot from me.
Indeed, I think a pickle is one way of putting it, but we'll
Yes,
leave it
I was
there.
being, I was trying to be polite. It's a family show.
Makes a change. Right, moving on to today. We've already had, of course, the inflation figures out of the UK this morning, which I alluded to earlier. Headline CPI rising by 2.3% on an annual basis in October, a little bit above the 2.2% consensus, but considerably above the 1.7% pace that we saw in September. A decent chunk of this is due to the rise in Ofgem's energy price cap. So we were always expecting inflation to move higher in October. What is perhaps a little bit more worrying is that we've seen a bit of a resurgence in metrics of underlying price pressures. So core CPI, which is obviously excluding food and energy, that rose by 3.3% on an annual basis last month. That's up from the 3.2% that we saw previously. And we also see services CPI, that's now back at 5%, up from the 4.9% that we saw in September. Naturally, markets have repriced modestly in a more hawkish direction. We now see just 2 basis points worth of cuts priced for the December BOE meeting, so effectively no chance that they do anything there. And the next 25 basis point cut, that is not fully discounted until next March at the moment, although there is, of course, a hell of a lot of data, both on inflation and also on the labour market to come between now and, well, the next but one BOE meeting, which is in February. And of course, that is when they will also deliver their latest round of economic forecasts in the monetary policy report. We did see some marginal upside in the pound, probably about 30 pips or so to a high of about 127.15. But cable, well, we're now, 90 minutes on from that print, has given up all of those gains and is trading back to flat on the day. In terms of the day ahead, then, the data docket is completely barren. There is absolutely nothing of any
Yay!
interest coming up. We do have some supply out of the United States a little bit later on, a 20-year auction at 6 o'clock London time. Central bank speakers are on the slate once again. The Fed's Collins, Bowman, Cook, and Barr. A handful from the ECB, and the BOE Deputy Governor Dave Ramsden will be speaking as well. But I guess the big focus will be on earnings today, and of course, earnings after the market close at around about 9:20 this evening UK time. The main highlight will, of course, be Nvidia. The implied move in Nvidia stock in the 24 hours following tonight's earnings release is 8.5%, which is quite frankly ridiculous for the second biggest stock in the world with a $3 trillion market cap. But nonetheless, that is what we're dealing with. Ahead of today, in terms of form, Nvidia have beaten quarterly EPS expectations 7 times in a row. This time around, EPS is expected at 74 cents on revenues of 33.25 billion. But of course, participants will also be looking to Nvidia's guidance as well in terms of unlocking that potential post-earnings rally. And I think that probably matters more than the figures themselves. But
Yes,
that will be
absolutely.
the main focus a little bit later on. Of course, not only in terms of Nvidia's stock, but also in terms of the markets more broadly, Nvidia being the second biggest in both the S&P and the Nasdaq.
Perfect. Well, we'll tune in tomorrow to work out, well, to unwrap, I guess, what's happened with Nvidia, because whatever happens, something will happen, if that makes any sense. Um, right, Mr.
Thought
Brown,
so.
thank you as always. Sort of. Well, that's good enough for me. That's well above my usual kind of grade, so I'll take that. Guys, as usual, if you are trading, keep it tight. Thank you for listening as always. And myself and Michael will catch you tomorrow.
See you then.
See you later. Do, 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 do.